Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories that we're tracking. Markets are marginally off the day's low, but the Midcap index trades with a cut of 1%. Stocks slip despite strong overnight gains in the United States and green ticks in Asia. Industrials, utilities lead the slide, while IT shows resilience.
A big block deal in Ajanta Pharma sees over 1.5% equity change hands, with promoters likely to have sold some stake.
India's largest winemaker, Sula Vineyards, makes a subdued debut on the exchanges. The management optimistic of double-digit revenue growth in the second half of this year.
Strides Pharma surges in trade as the company gets a 525 crore rupee for deferred consideration for sale of Australia operations in 2019. Company says sales proceeds to be utilized for deleveraging balance sheet. All right, those are the top headlines that we are tracking on Midcap Radar. Good afternoon. Markets still down. There is a mild recovery that we've seen from the lows above that 18,100 mark, but even that is slightly getting sold into. So yes, no respite is what we are seeing right now as the weekly options expiry as well, and it is the Midcap index which is underperforming yet again today. So that one is down 1%, and the advanced decline ratio well, in favor of declines. 1:8 is the ratio currently on the NSE. So big moves across the board, and we are seeing that the sectors which were doing well earlier, the PSU banking space, the fertilizer space, they all have come in for massive profit taking. So something like a fact is down 10%. We have Madras Fertilizers down 10%. Across the board, we are seeing big selling coming in. Only few pockets, if at all, are doing well, and all the indices in the red as well. But Reema, so we have not taken cue from what was happening in the global markets today. We'll have to see which way things go.
Absolutely. Right now, at least, the pharma index is holding up in the green. So that's the only pocket of, strength in a way you could say. So names like Sun Pharma, Apollo Hospitals are up in the green. On the mid-cap end of trade, you would also see up moves coming in many of the pharma names. So Spark, Wockhardt, IOL Chemicals, Strides Pharma, Marksons Pharma. These are the names where you are seeing that little bit of a green. So that's the only oasis of green in our sector. That's the pharma index, but it comes off on the back of a rough year with the Nifty Pharma index down close to about 10-odd%. Right now, as things stand, we're down, but we're not out because the Nifty is trying to stage a bit of a rebound, but we are trading below the 50-day moving average, which is 18,143. Let's invite Dharmesh Shah, the head of technical at ICICI Direct now, for a tech check on the markets. Dharmesh, afternoon. What have you made of this two-day slide that we are seeing? And do you think Nifty can hold on and bounce from these levels? Is it overdone?
Good afternoon, Reema. Yes, definitely. I think so. We are under pressure right now after breaching a strong support of 18,300. More of a panic type situation going on in the market. Going forward, what we believe is that the 38% retracement, which is placed at 18,063. If you look at the today's low was around 18,068. So we feel, I think so, we may see a technical bounce back, but not so convinced on the upside also. We feel, I think so, 18,300, 350 remains to be the very strong resistance. On the downside, we believe, I think so, 17,900 to 800 will act as a very strong support for the coming week. So we don't expect market to breach the level of 17,800 to 17,900. And a dip towards those levels should be looked as a buying opportunity, but not in today's trade, because if you look at the market has been very volatile. We have been seeing a fluctuation of 50 points in just 5 to 10 minutes. I think so. So trading intraday could be a bit of a risk. So avoid intraday trading, but yeah, definitely positionally, I think so. Any dip below 18,700, 18,900 should be look as a buying opportunity.
Okay, and in that case, what would your individual technical picks be, Dharmesh?
Yeah, so as we see the market, I think so, more of a consolidation going forward, and some bit of a corrective phase cannot be ruled out. So we stick to more of a quality space, I think so, where we believe that in the telecom space, Tata Communication is the one where we like. I think so, Tata Communication, after bullish flag breakout, the stock seems to be retesting the previous breakout level, which was placed at around 1250, 1260. We believe, I think so, at the current market price, it's a buy with a target price of 1320, keeping a stop loss of 1210. Second stock which we like is a capital goods space. As a capital goods space, as a space has been relatively outperformer. But yes, definitely in the current scenario, we are seeing the stocks which have seen a sharp run up are more of the other ones which have been witnessing a profit booking. So KEC International is the one stock inside the capital goods space which we like. KEC, again, I would say that a triangular consolidation breakout has been witnessed from a range of 430 to 490. Current market price of 450. We believe for KEC International, a strong support at 420. Looks for a target of around 490 once the market sees stabilization. So these two stocks, KEC International as well as Tatacom, remains to be a top pick at the current market price.
Okay, all right, Dharmesh, thank you so much for joining us, taking us through those technical picks and the outlook as far as the technicals of the markets are concerned. It's time to move to our segment, Mid-Cap Movers. We have Vivek with us to take us through all the mid-caps that are moving around in trade today. Vivek?
Well, good afternoon. Quite a lot of stocks, actually. It's a weak market, especially in the broader end of the markets. But despite that, selected a few stocks today that are at a fresh 52-week high. Abbott India, after a while, today comes and hits the 52-week high mark. Consumer name Jyoti Labs too, today, after a while, has seen a strong surge on good volumes as well and at a fresh 52-week high. The pharma trade continues. Today, it's the turn of the mid and smaller cap names to do quite well. So Morpen Labs, continues its up move for the second straight session. You also have Wockhardt up on strong volumes today, and Ajanta Pharma, after the block deal, has seen quite a sharp recovery. Also seeing names like Sun Pharma Advanced, Aster DM, as well as Alchem Labs, all up today on good volumes. Now coming to some of the stocks where you're seeing very good and strong volume action, in fact, when you're comparing it to the 5 to 10-day average. Huhtamaki India, the packaging name, is up on very good volumes. Westlife Food as well as Craftsman Auto today up on strong volumes. On the other hand, some of the weaker names that we are seeing today, all of these stocks are also at a fresh 52-week low. Borosil Renewables today at a fresh 52-week low. BSE Limited, Indigo Paints, as well as Nippon Life India, waiting for some news flow, if any, on these names as well.
Okay, all right, Vivek, thank you so much for joining us. So all those stocks in focus today. We'll slip into a short break now. Up next, we'll be joined by Shashank Agrawal, who is director at Salazar Techno Engineering, to discuss their recent large order wins. Stay tuned. Welcome back. Still tuned into Mid-Cap Radar on CNBC-TV18. Salazar Techno Engineering is in focus. The steel structure manufacturer and EPC infrastructure player has gained over 104% this year. The company recently backed 2 orders worth 750 crore rupees from the state-owned Vidyut Vitran Nigam. Shashank Agrawal, the director of the company, is joining us now to discuss this and the business outlook as well. Mr. Agrawal, good afternoon. Thanks a lot for joining us. Well, it's a big order that you have received this time around. Can you tell us what does it take your order book to? What is the order flow expected this year itself? And are these orders coming in at higher margins for you?
Good afternoon. So basically, these orders are for revamping of distribution sector for the government, which the focus is to improve the distribution sector, to improve the operational efficiencies and the financial sustainabilities of the DISCOMs. So as a part of that, we had already executed orders worth 250 crores over the last few years. And this is another order of basically 2 orders totaling to about 750 crores, wherein we'll be improving the infrastructure for distribution sector. So as as on date, the order book, including this order, exceeds over 2,000 crores. And these orders have to be executed over next 2 to 3 years. Till about 24, 25. And of course, the market is very competitive in terms of the margins. So margins would typically, depends on how the project is executed, would of course take the margins on a slightly better curve.
So Shashank, your order book, the current order book of 2,000 crore would compare with an order book of 982 crore as of 30th September, right?
Right. Yes.
Is this the peak order book for you?
Yeah, this is the highest ever order book for us as on date. Till date. Yes.
Okay. And what's in the pipeline? Could you give us a sense of how many orders are you likely to bid for? What are the tenders that are open? The quantum of it, and are you L1 in any?
Yeah. No. Okay. We have a few more in the pipeline. We are also foraying into the international EPC sector, and we are lowest bidders in a couple of tenders there, wherein we are expecting some letter of intents and agreements to happen over the next few days, or maybe end of this month or over a period of the next month.
So how much will that add to your order book? Like the projects that you spoke about in the next 3 months of this financial year, what will this take to your order book to? How much of an order inflow are you expecting?
So we are expecting another order flow of about 300 crores odd. over a period of next 2 to 3 months.
Okay.
And what about these international orders that you're bidding for with geography? Do you have the required size to bid for large international orders?
Yeah, we see these orders have already been bidded, and we
Okay.
are already lowest bidders. We have already been declared lowest bidders in a couple of tenders. We are just waiting for the LOIs to come in or the agreements to be signed so that it can be made public to
So what's the quantum of the LOIs that you've signed right now for the international orders?
The LOIs which we are expecting from the overseas standards is close to 300 crores.
100 crores.
300 crores?
crores.
Yeah.
Yeah, 300 crores.
Okay, so
Yeah.
right now it's at 40 crores, the last known order book. The export orders were around 40 crore rupees. So now 300 crores additional you're expecting just from exports. I'm just a little
Yeah,
confused.
so we have order book for manufacturing. Well, we have two order books basically. One is for exports of manufacturing product. Another one is for the EPC product. So when we say 40 crore was only for the export of telecom towers,
Okay.
which keeps on continuing. So we have another order book of almost 25-30 crores pending as on date for export of telecom towers and related infrastructure. Plus, this is the additional order which I'm talking about from EPC sector would also contribute to our manufacturing partly. And there'll be a lot of bought out items also to execute these orders in Africa and in other part of the world.
So if these L1 orders convert by the end of this fiscal year, what could the order book scale up to?
Of course, it'll exceed 2,300 crores.
2,300 crores.
Okay. So while your order book is looking good, one of the concerns has been debt for you. 0.9 times is the debt to equity as on FY22. It has been increasing over the last couple of years. What is the absolute debt in your books? And will you be taking more debt since you are applying for more projects or winning more projects here?
So basically, the debt is not long-term debt. This is all working capital debts, which are basically being used to finance the projects as well as the manufacturing. Yes, we do plan to take some more debt in terms of working capital, increase working capital limits from the banks to execute these orders. Because this year, we are expecting a growth of about 25 to 30% compared to the last year. And the year after, probably another 30-40% growth. Which would, of course, need the infusion of capital from anywhere, whether it's from banks or investors or anywhere.
Okay. Will you also look at tapping equity markets for it in some form, QIP or something?
Yes, that's also on the anvil.
Okay.
What's the size of the fundraise? Why
We
the
are
equity
just-
route?
No, right now it's just on the discussion stage. I mean, it will be difficult for me to divulge those informations.
But how urgent is the equity requirement? Do you think you would need to do a QIP, say in 2023?
Sorry, can you say that again, please?
No, I wanted to understand how urgent is the requirement of funds for you. Do you think a QIP is likely in 2023 in the next 4 months, or do you think it'll spill over in the first
It's
half?
not very urgent. We have capital to start the projects at the moment. Plus, we have tied up already with the banks for the increased working capital limits, which will sail us through this financial year, probably part of early financial year. And during next 6 months, we can plan something as a fresh infusion of equity.
So after 6 months or within 6 months?
Yeah, within next 6 months, I would say.
Okay.
6 months.
All right. I was looking at your balance sheet as well, and in last couple of years, your debtor days and inventory days have been higher. What is the general, working capital requirement for a business like you, because you are in different segments, and will it come down from here?
So if you segregate EPC sector and the manufacturing sector, the EPC sector working capital requirement is, of course, is pretty large. Whereas the manufacturing portion of the company doesn't require that much of working capital in terms of number of days outstanding. So overall working capital, we are running at around 125 to 30 days, which we are at our level, we are trying to bring it down as much as possible. Plus, the new orders which we have received from PBBNL, there is a clause for early payment also from the government, which could help us improve on our cash flows and might bring down our working capital cycle a bit.
Okay. So prospects are looking great, 25 to 30% revenue growth or growth in this year, 30 to 40%, highest ever order book as well. But the concern is that promoter holding has fallen this time, 63% versus 69.7% on a quarter-on-quarter basis. What is the reason here? Will promoters look to sell more?
No. See, promoters haven't sold a single share from the day one. We still hold the same kind of equity as we were holding the day one. But it's just that some few investors, institutional investors have come in, and we had done a preferential issue. So promoters in absolute number of shares are still holding the same numbers as they were holding on day one of IPO. The percentage has come down because we have issued fresh equity to, as a preferential as well as a QIP.
Understood. Okay. Yes. Mr. Agrawal, thank you for that clarification and thanks for joining us and speaking about the business prospects and what's happening and the order pipeline as well. That's the word coming in from Salasar Techno Engineering, expecting strong growth in FY23 and FY24. With that, we'll step into a short break now, and up next, we'll focus on some stocks and focus on Sula Vineyards. It's the new listing in our special segment, Midcap Spotlight. Stay tuned.
Welcome back. We are staring at an intraday recovery now. The Nifty's pulled back or recovered 90 points from the day's low. The low today was 18,068, and from there has been a recovery. The low was hit sometime around 1 p.m. and in the last close to about 1 hour, we have seen the markets recover. A quick check on the stocks which are moving up in the last 1 hour. Well, you've got Reliance Industries, that one's contributing. So Reliance Industries has recovered. Now that's back in the green. Look at Asian Paints. Asian Paints is now back in the green as well. You also have strength coming in on Hindalco, Maruti Suzuki. So these are some of the names where you are seeing some buying coming through in the last few minutes. But let's get to our Midcap Spotlight segment. Surbhi is with us and she's going to be telling us about the new kid on the block, Sula Vineyards. This, of course, is a name that we all know, but that's made its debut on the exchanges today. Fairly subdued, down 5%. Surbhi is here with more on that. Surbhi?
Hi, thanks for that. So Sula Vineyards made its debut on stock exchanges today and it saw a weak listing. It was listed at 1% lower than its issue price of 357 rupees. Now, some of the reasons for its weak listing could be: one, it was valued at extremely high valuations. The company was listed at 55 times FY22 PE, which is in the similar range of its much larger peers, United Spirits and Radico Khaitan. Revenue for Sula for FY22 was 454 crores, which is close to 21 times lower than United Spirits, but the PE range for both was quite similar. To add to that, the company's revenue has not seen good growth in the last 3 years, and so that is something the street is not liking. Secondly, the wine market in India is still very small. Wine consumption of the overall alcohol market is less than 1%. And to put it in perspective, India consumes only 40 ml of wine per person per year versus the world average, which is 5.5 liters. And lastly, increased premiumization may also increase the competition intensity for Sula. The management does want to grow its 2,000 rupees plus category wine, and they did say to us earlier that their premium category Rasa is growing at a much faster pace than the industry. But with the possibility of FTA coming in, they will have to compete with the imported wines, and that may impact their sales going forward.
Thank you very much for that. In fact, earlier today, we chatted with the MD and CEO, Rajiv Samant. He joined us after the listing ceremony, and he's given us an outlook for the business going ahead. Listen in.
We have a fantastic journey ahead. Wine is growing faster than whiskey, than spirits, than beer. This is the story. It's a long road ahead. Sula is the leader in that. India is changing so fast. Wine has terrific prospects here. We are seeing revenues growing strong double digits. Of course, H1 was a terrific H1. Revenues were up 40% over H1 last year. We don't expect that kind of growth in H2. That's going to moderate. But we see growth across the board. 85% of our revenue today comes in from our own branded wines. But in terms of wine, of course, horizons are long. Definitely, we've got some plans for next year. I'm looking 5 years out. I see no reason why, in a few years down the road, this should not be a 1,000 crore company. I don't see any factors that are really going to push back on that. And really, I would say that that's something that we definitely have in mind. And in terms of margins, we've done some terrific work over the last couple of years, really to streamline things. So I definitely see margins remaining stable. And, it's not a bad guess to say that it's going to be in the 25% plus EBITDA margin range. That's definitely something that we're looking at.
Looking at a 25% EBITDA margin, growth will moderate in the second half of the year, but it will still be in double digit. That's the guidance given by the management of Sula Vineyards. With that, we're out of time on Midcap Radar Mutual Fund Corner when we return.